Andy Lynch. He's a fund manager at Schroder Investment Management and manages just shy of $2 billion. We'll get to your stock picks in a minute, but I just wanted to get a sort of take on just where we are on Europe this Monday morning. I mean, any sense of a solution to Europe's debt crisis appears to be unravelling on a daily basis, certainly if you see what the ratings agencies say.
The rating agencies obviously have come out and said what they think. On the other hand, there's the discussion about putting some more money into the IMF. If then that takes out some of the sovereigns that are currently paying very high yields in the market, out of the market for a couple of years, gives them time to restructure their finances, that can only be good news.
It's very interesting. We've got Noyer of France saying that large-scale asset purchases are beyond the ECB mandate. Not particularly anything particularly new here, but this is quite interesting as well. Noyer says ECB has fully played a role as lender of last resort.
I mean, in the lender of last resort role, it absolutely has, because that is very much a role constructed for backing up the banking system. And when you look at what the ECB has done to support the banking system, loosen collateral, doing the 3-year refinancing operations later this week, early next year, yeah, the ECB has done a huge amount to support the banking system, and the lender of last resort function has always really been understood as being for banks and not for government. So, Mr. Noyer is absolutely right in that the ECB has done a huge amount in a lender of last resort function.
Let's take a look at where you're exactly putting your money. You've given us a couple of stocks here. Gategroup supplies catering and services to the aircraft industry.
Absolutely.
What do you like about them?
Basically, it's in a sector that is currently unloved for quite obvious reasons. So that always makes me interested, just because going a bit against the grain. More importantly, they're immensely cash generative. So a lot of their earnings come through in actual real hard cash at the end of the year, and then that is a really good position for them to be in. So over the time they've been on the stock market, they've deleveraged massively, they've done acquisitions as well to boost their market position, and the net debt keeps on coming down. So
and not too dependent on the health of the airlines then, is that, because a lot of people are saying, recession next year, airline travel is going to be right down.
Airline travel could well be down slightly, but the way their business model is structured is, even if there are fewer people on each plane, they earn a fee for turning up to the plane and loading the food on it. So they're more geared to number of flights rather than number of people on each plane. So
55% down for the year. This looks as though they could be a good bargain then, is that what you're saying?
That's exactly my point, that this is a turnaround story, hopefully, for 2012.
Let's take a look at the industrial services business, Imtech.
Yep. A very interesting business, domiciled in the Netherlands, but is really a European business. And they do a multitude of things, but quite interestingly, they're very much involved in restoring buildings to make them much more energy efficient, much greener. So their high-profile example of that is the Deutsche Bank Tower refurbishment in Frankfurt that they've been the lead contractor on, and that's really a very good contract for them, and obviously meets everyone's sustainability targets for the coming years. I'm
very interested in your third pick here, Irish Continental, a ferry operator. We haven't had many people picking Irish stocks for a while.
Well, indeed, and then I guess a bit like Gategroup, it's a bit contrarian, a bit unloved, but this is a business that has almost no debt, again, on its balance sheet, generates a lot of free cash, and while the overall Irish economy is clearly facing headwinds, the export sector of the Irish economy is doing very well, and Irish Continental, a lot of their volumes come from exporting pharmaceuticals and so on out of Ireland into the rest of Europe, and indeed into the rest of the world.
But Ireland is recovering, as are some of the countries in Europe. It could turn on a sixpence and be incredibly damaging if those really dire warnings of European recession come into place. And that's what we're looking ahead now, isn't it? Or are you more optimistic?
I think sort of for the Irish export sector that really drives them, it's much more a global play. So for companies like Pfizer that have got their European headquarters there in Ireland, they're exporting from Ireland, and people are still going to need medicine. Kind of whether or not the economy does well or does badly, the sick are still going to need to be treated. And that is not going to be damaged particularly by any worst case scenario on recession or otherwise.